Well, it is not quite 1 o'clock, but it is getting close enough that I'll begin with some of the housekeeping items and then we'll move into the actual presentation. First of all, welcome everybody to our Backgrounding Fundamentals webinar. Before we get started, I want to introduce the rest of the people who helped put this together. Sydney Vanderhoff is our beef nutrition field specialist based in Mitchell. Madison Kavarna is our beef nutrition field specialist based in Watertown. Although I can see she's in Brookings right now because I recognize the background. But the three of us came up with this idea this fall as a way to address the topic of background in cattle. It's something that's critically important to South Dakota, but doesn't necessarily always fit into some nice, neat boxes that cow-calf for finishing does. So we thought this would be an opportunity to reach people that are involved in this industry, and perhaps we picked a pretty good format for a day that or a week that's going to struggle to get out of the single digits. So this is an opportunity for folks to either stay inside where it's warm or not venture very far from home when we got a lot of things that can go wrong. Matthew Knipling is also online. He is a member of our ed tech team. He's going to be doing all of the behind the scenes work to make sure this functions as smoothly as possible. This segment is recorded, so if you want to review something that perhaps missed the first time, or if you need to step away, or for those that couldn't make this time slot, that's the reason we record it, is to allow people to come back at their leisure. At this time, I'm going to be, or the team of us rather, will be monitoring the chat. So if you have some questions that come up, type those in. We'll make sure those get addressed at some time during the webinar. We've got a poll up. We'll leave that for just a little bit, Matthew, before Dr. Dierson gets started. So if you haven't had a chance to answer some of those polling questions, again, certainly not mandatory, but it's a way for us to get a gauge of what our audience looks like. Right now, then, I'll introduce our speaker for this opening session of the Backgrounding Fundamentals, Dr. Matt Dierson. Dr. Dierson is a member of our extension team with a focus on risk management, and the title's long, Matt, and I don't remember all the details. I think of you as the risk management livestock economist, and I know I'm not getting that perfectly correct, but a wealth of knowledge, number of years of experience here at South Dakota State, and we're very happy to have him agree to work with us on our Backgrounding Fundamentals webinar, where he's going to talk about the cattle market outlook, as well as some of those tools that are available to manage price risk. Because as I look at the poll, finances are one of the key barriers. So, so that speaks to some of the financial constraints and challenges that go along with feeding cattle. So with that, Dr. Dierson, I will turn the floor over to you. Again, for the audience, we'll be monitoring chat. So if you have any questions, feel free to chime in there. Thank you, Matt, Dr. Dierson, the floor is yours.
Thanks, Warren. Can you share those results so we can see them? Or we see the second question, or?
I think you just have to scroll down on that box that pops up there, Dr.
Okay.
Dierson. Yeah, the scroll bar kind of gets hidden there on the side.
There we go. Let's see. Yeah. All right. I'm going to fly blind. I need to start sharing a screen. We're going to take a look at different aspects of backgrounding. Coming at it from a big picture, most of the backgrounding in South Dakota happens starting in the fall of the year, and then we'd be right in the middle of backgrounding season. And then sort of the end of the season would be typically that March time of year. So that's what we're talking about. Taking calf weight or a backgrounder or roughly a 500 to 600 pound animal, feeding it, backgrounding it, preparing it for either summer grazing or more likely full feed in a feedlot following the backgrounding time period. So that's where I'm coming from on this, and that's what we're going to take a look at. So with backgrounding, You have to start with, hey, we've got a calf here, and that calf was worth, at least this last year, a fairly large chunk of change. The price for 500 to 600 pound steer calves shown here on this chart. I've got this data going back to 1993 in a user friendly format, but you can see here that 2023 had very, very high calf prices. So what you're starting with is a $300 calf on a 500 weight, so $1,500 animal that you're starting with. That's quite a bit of money tied up in that value of that calf. We can see here that normally during the fall of the year, so October, November, December, that early winter frame, that's when most of the calves in South Dakota end up going to sale barns and moving through the market. And that's normally the time of year where you have some seasonal price pressure. And some of that price pressure happened in 2023, but it wasn't extensive. And a main driver behind that calf price, even though fed cattle were under some pressure and feeder cattle were under some pressure late in 2023, the calf price stayed fairly high because the price of corn fell throughout that latter part of the year. So that's what we're using as the starting point for taking in most cases here, I'm going to use a 550 weight steer and adding weight onto it through the backgrounding time period. Real big picture. So looking ahead or looking out into the future, we've got the USDA baseline here. This shows the cattle inventory, all cattle, calves, the total cattle inventory from where we're at now through the next 10 years. This is straight from the USDA, but shown here on with the gold bars going across the bottom. They see, or their baseline forecast was to have the cattle inventory in the U.S. Sort of reach a bottom on January 1 of 2024. Well, we'll have to see if that happens, but the general idea is take the inventories down, and at the same time, that will give fairly high prices on the other side. So we're moving into a general time period where we'd expect after 2024, cattle inventories to build, more heifers will be held back, and that will expand the cattle herd, and that will drag down or put some pressure on calf prices, which is shown here in the dark blue line. Going across the top, the USDA baseline has the 2024 calf price, which would be very similar to a 5 to 6 weight steer price in South Dakota. Those prices peaking here in 2024 and then declining a little bit thereafter. Now, that doesn't mean that backgrounding will or wouldn't be profitable, but it does mean that you're going to see more, or the expectation over the next, say, 5 to 10 years would be to have more calves available on the market that could go into backgrounding, and it will generally mean slightly or some downward pressure on price going forward as well. One other fundamental thing, just to kind of get everybody on the same page. If we look at the South Dakota cattle on feed situation, got a little bit of it's not a unique situation to South Dakota, but a situation that's a little bit, it's similar in Iowa and Nebraska. We've got both large and small feedlots. Now, the very large feedlots in South Dakota are reported to USDA through the cattle on feed report, for example. You can see those large lots in terms of the number of head on feed as of January 1. So last year, the January 1, 2023 figure, you see the large feedlots had about half of the total number of cattle on feed in the state. So those will be reported in those cattle on feed statistics and reports. But I want to point out that the small feedlots in South Dakota tend to have about the same number of cattle on feed at a given point in time. So there is some large feedlots, but there's also a very large number of small feedlots that make up the industry or make up the do the cattle feeding. Now, with backgrounding, some may end up being on full feed, so some end up get classified as regular feedlot cattle or cattle on feed operations, and some may be classified as farmer feeder type operations or an operation with a feedlot enterprise. So it just depends. And then along these lines, I'd point out that in early or mid-February, February 13th, if I recall correctly, the 2022 Census of Ag results will come out, and that'll give a little more insight into the numbers and the levels of cattle on feed across different sizes of feedlots. But just for information's sake there, I wanted to point that out. A fundamental change that has occurred over the last couple of years would be the interest rate or the interest expense associated with cattle feeding. So this is a summary of ag interest rates for all types of feeder livestock. So this might include finished cattle or hog operations with a finishing operation or finishing enterprise rather. And we can see here that the interest rate had been very low for a significantly long period of time. Let's say 4% interest was a good interest rate paid by farmers for a fair number of years, specific to a feeding enterprise. Well, in 2022 and in 2023, we've seen those interest rates jump dramatically as the Fed has adjusted the baseline interest rate higher or short run interest rates, and that has pushed up and also got a little bit of added risk on the feeding side of things across species, meaning that it's going to be a little bit more expensive from an interest perspective to hang on to calves in this case. And if you're borrowing money for the feed or you have already borrowed funds, this is pushing up your interest opportunity cost of backgrounding. So it's adding an expense that really hadn't been there for quite a long time. That's really kind of come to the forefront again here in the last couple of years. So just wanted to point that out as a small but a relevant fundamental piece of information that's changed, and changes affects the feeding returns a little bit as well. I did try to take a look at where in the U.S. Some of the backgrounding may occur, and it's really kind of a difficult measure or level to really get to really put in perspective. Just adding some weight to cattle is kind of a funny thing that doesn't always get measured the same way. So as a proxy for that, I thought I'd throw up the map showing here feeder cattle supplies outside of feedlots. So if you think about the U.S., you've got a fair amount of cow-calf states, or states more known as cow-calf states, across the northern plains. Missouri has a huge calf crop every year. Texas has a giant calf crop every year, as does California. Some of California's would be dairy mixed in with that, but then you've got feedlot states, and they run across the southern plains for the most part. Iowa, Colorado, and such. So, and then in between, you've got some backgrounding that can happen. And here, just to see that, in the central part of the U.S. is where some of that backgrounding is more likely to occur. It's where you've got cattle not yet on full feed in finishing feedlots, but you've got some cattle that are there, and you can see that it's just kind of heavily concentrated across the plains states. So this number, or the aggregate number of feeder cattle outside of feedlots, is data doesn't go back forever, but it's a very low, historically low level. So there aren't many cattle not on feed that are there to be had, and that's done a little bit to help keep some support under the dollars available for backgrounding. So the last few years, if you've been able to background cattle, put some weight on, or find some way to add some weight to those cattle, it has been generally a profitable enterprise. Now, there's a few specifics as far as discussing the markets related to feeder cattle, and I thought I better just kind of go back and review just a couple of pieces of basic information about feeder cattle contracts. So these are traded on the Chicago Mercantile Exchange. They're cash settled. So when you're dealing with backgrounding and dealing with a feeder cattle contract in any way, there is no delivery. These aren't hauled on a truck to Kansas or Chicago or someplace. The feeder cattle contract is cash settled. So those futures and options settle to a cash price that's determined everywhere from Iowa and Missouri to all the plain states. So pretty much anywhere where you saw the feeder cattle outside of feedlots is the predominant area where AMS sale barn reports get compiled together to make the CME feeder cattle index, and that's what futures on feeder cattle settle to. The futures and options both settle on the last Thursday of the month, except November, and that I'll point out that why that's relevant here in a little bit, but normally you're seeing these settle at the end of the month. November is the one exception, and normally it's not a big deal, but in 2023, it kind of resulted in the November contract went off the board, or it settled in the middle of November, and the futures price seen from the middle of November through now has been the January 2024 contract. So started paying attention to that a little bit sooner than normal, and had quite a big discrepancy or disparity between the cash price or the feeder cattle index price throughout the latter part of 2023, and always looking forward to the feeder cattle futures price, which was reflecting the value to be had on the last Thursday here of January. So a little bit of an unusual situation, and a lot of activity in the live and feeder cattle markets here in the last couple of months, and in part seeing that January contract move quite a bit. The contracts are for 50,000 pounds, and the feeder cattle futures reflect a 7 to 899 pound steer. Something that's grading, beef grading, medium and large number ones and twos. So basically the type of cattle that gets moved through the sale barn in the Northern Plains. So it's going to be a beef animal, and the specific weight 7 to roughly 900 pounds there. So think about an 8 weight. For conversation's sake, prices are quoted in dollars per hundredweight. So if you're thinking about that feeder cattle contract relative to calves, it's 500 hundredweights, or about 100 pound or 100 head of calves. But for 8 weights, that's only 60 head of feeder cattle reflected in a contract. So what does that price look like? Here's the March 2024 feeder cattle futures price going back for about a year. It has moved around. It's basically unchanged from where this snapshot was taken a few days ago. But you can see that the price was very, very high back in September, and fell sharply and was greatly affected a couple days after the October and November cattle on feed reports, and it's come back a little bit since then. But you're not backgrounding cattle this whole time. You're looking probably during November for when you might be taking cattle, calves, to be backgrounded. Maybe you're buying calves, maybe you're keeping your own calves, and you're looking at what's happening or what will happen to the price between November and eventually March of the next year. So can we have that other quiz question right now, please? So I've got a question here, and it's ignoring this last year, but looking back at over the last 30 years. There we go. Give me your best guess at what you think the biggest March futures price decline was from November until March. From November, so from this time until March out here in the future, what's the biggest decline we've seen over the last 30 years? So letting them trickle in. Nobody believes the $5 one yet. So, which is probably about the decline we've seen this year. Maybe a little bit more than that this year. So, but looking back into history. And Warren, whenever you want to pull the plug on this. There we go. So I'm going to mark these down. 28 said 11, 44 said 15, and 28 said 19. All right. We'll see those results in just a little bit. So with this as the base here, want to point out a couple more things. If we look at feeder cattle basis, so what's the difference between the cash price and the futures price? Here's basis this last year. So this is what's the cash price for an 8-weight steer sold in South Dakota by month relative to the nearby feeder cattle futures price. So that basis last year in April and May was very high or relatively high compared to the prior 5-year average. So if you'd asked me a year ago to guess April and May basis levels for feeders in South Dakota, I'd have said $5 over the board or $5 higher than futures. Ended up being much higher, and November ended up being about $12 over futures. So the cash price observed in South Dakota was much higher than the futures price. And there too, again, reflecting a changeover particular to November, rolling mid-month. So it's cash price for the entire month, and that futures would be half the first half of the month would have been the November futures contract, the second half the March contract, which I normally wouldn't like to use in a comparison. But what does this mean going forward? Well, for feeder cattle in particular, it tends to work pretty well to use a 5-year average basis for planning purposes. So even taking into account some of the bigger swings last year, let's leave them in and let's do a new 5-year average. So basis over the last 5 years, this is what I would use for a planning price or for planning purposes for 2024. So looking at March, our target time for when typical backgrounded cattle would finish up, we're seeing that you could use the futures price and add $5 to it. So if I was looking at March feeder cattle, the board, whatever the number would be, I'd add $5 to it to get a planning price or an expected price to sell calves in South Dakota. June, there's very few transactions. That's why that basis stays kind of funny that way. So planning purposes, 5-year average is what I would look at. So you've got a price advantage backgrounding in South Dakota and the region because the price for an 800-pound animal is $5 a hundredweight greater than average, so greater than across the northern plains and across the plain states down south. So $5 a hundredweight on an 8-weight, $40 a head premium from an expected revenue side against the futures price. Now, fundamentally, there's something else I wanted to point out. We have several Bloomberg financial terminals here in the Nest School at SDSU. So Bloomberg's do a nice job of bolting together different contracts. So here's the last 10 years of March feeder cattle futures bolted together. So once a March contract goes off the board, a new one comes on and starts trading. That's why this chart's drawn from April until March, year after year after year. So this is all the March contracts bolted together. Now, normally, if you think about a cash price in the feeder cattle market, you expect a little seasonality to it. When you look at futures prices, those tend to go away. So on the chart here, you get this dark, thick, light blue line going through the middle. That's the 10-year average of March feeder cattle futures. And you can see that pretty much there's no pattern at all there in that in that average. And that means that half the time futures price is right, and half the time it's wrong, and half the time it's below where it ends up, and half the time it's above. In other words, that futures price is unbiased. It's not wrong, it's not high, it's not low, tends to be right where you'd expect it to be at the end. So that unbiasedness is a good feature, and you don't have seasonality in that price pattern. Now, I've got two other prices shown here. We might recall the last time prices were at these levels would have been the 2014, 2015 season. So from futures contracts that ended in March of 2015 were the highest that people can the highest on record, or all-time highs. And then for much of this during 2023, the March 2024 futures price was higher than it had been in that 14-15 time frame, and then a little bit of a time after Thanksgiving and early December, that price fell below where it had been back in 2014-15. And the USDA, the Economic Research Service Livestock Dairy Situation Outlook had a feature last month just pointing out that on a nominal basis, prices have been close or higher than 2014-15, but on a real basis, so accounting for inflation, the prices are not at the levels they were back at that time. So these prices are higher from a nominal perspective, but not when you adjust for inflation. So that means from a purchasing power side of things, and if you sold calves this last fall, or if you're backgrounding right now, the dollars you're going to receive aren't going to go as far as they would have in the 2014-15 time frame. So a lot going on with the busy chart, I know. Here's the and last thing I'll point out, you can see that some years this price goes down quite a bit, some years it goes up. So if we look from the November time frame through March, you'll see a couple of the big years stand out. And here's the biggest one in red here. Started from a very high level in November, and then where it finished up. So take a look here. What happens to prices? Those of you who said, the 28% of you that said the futures could fall by $19.70 from the level observed in November until its final expiration in March were correct. It happened close to that a couple of times. Once just 4 years ago, the futures price declined almost $20. It was like $19.50, and then a few years before that, it was $19.73. So way back a decade or 2 decades ago, small price changes were likely, and then two things have happened. I don't know that the market's gotten that much more volatile, but the changes are going to be larger because the price level's higher. So this wouldn't look quite as extreme if we were looking at percentage changes in prices as it shows up here in this absolute setting. So something we'll take a look at. But I do want to point out that in the last decades, the last 10 years, there have been some fairly large or fairly extreme moves down in the futures price relative to the longer run. So again, I don't think there's any bias in this market. I think you're as likely to see the price go up as down from any one point in time until expiration in this case. But I wanted to point out that you do have several instances of large observed price declines, $10 declines, $15 declines, and $20 declines that can take something from small profit or profitable on paper when you decide to start backgrounding, the price, the futures price, moves against you between the time you set out the background and finish, and the market wipes out any profit that was there to be had. So that is a constant consideration. It's something that should be managed looking at backgrounding. The other thing with the markets, did take a quick look here at the volatility in the market. Volatility got very high in late 2023. So the the white line going through here is the March contracts. You can see where these contracts roll over at the end of March. So here it is in 21 and 22 and 23. And there's not giant patterns in this, but I wanted to point out what can happen. And if we jump back to 2020, you saw the volatility in that market go up with the COVID shutdowns. The volatility went up to 50%. So at those times, to buy something like a put option or LRP would be cost prohibitive to do, and that would really dampen things. Volatility was very low for much of 2023 until that the price drops there late in the year. There is also some seasonality in the checking the time here. Seasonality in the feeder cattle market. So would there be could there be an incentive to change when how fast you would push the cattle to have them hit your target weight at different times? Well, yeah, there's a little bit of seasonality in the feeder cattle. So if I'm looking at this seasonality index and I had a price forecast for calendar year 2024, I would say that I would expect higher than that during the month of July and August, and I expect a little bit lower than that, say 95% of that forecast in January, February, and March. So yeah, there's a little bit of seasonality there, but you probably don't want to try to time a calf to maybe hit an 8 weight by July. I mean, your cost of feed for maintenance and stuff might be cost prohibitive. So that'd be a reason to not target out that far. And then for this time of year, January, February, March, April, there's really not a lot of discrepancy or disparity in terms of the seasonal price level you're likely to see. So I wouldn't do something to try to move it back and forth a couple of weeks or even a month. You'd have to move it substantially, and it'd have to fit in some sort of a bigger cycle to make some sense that way. So wanted to point that out. And here's what happened last year. So you can take and go to the CME, and you can download the CME feeder cattle index and then break that out by location so I did that for 2023, and I just isolated South Dakota locations, and you could build that up differently using the AMS data as well. But taking that data, it just spotlights where did 700 to 900 pound steers, when did 700 to 900 pound steers get sold in South Dakota? What price levels were they at, and what weight levels were they at? Well, there's the volume. So this is the number of head of feeder cattle, grading 1s and 2s, steers only, by month in 2023. You can see that in January, February, and March, huge or large volumes, number of head of feeder weight, 7 to 9 weights, move through the reported AMS sale barns during those times. So if you jump out there to July is not a big month to expect a lot of 8 weight steers moving through South Dakota sale barns. So it's very consistent with 500 to 600 pound calves that would normally be marketed in October, November, to be backgrounded and then run through the sale barns in January, February, March, weighing 700 to 900 pounds. So that March volume is high, and it's consistent with this region being a little bit low. At the same time, that's when the cattle are moving to the market, and the premium from a seasonal perspective is just showing, or I think reflecting, very low volume of cattle moving through. I also did another look, or cross-sectional look at this situation, looking at feeder cattle weights, just in case there was some sort of a pattern there. But you can see from January and February, the average weight reflected in the sale barn data through the CME index, the average weight is 775 pounds. In March, it's 800 pounds. And then out there in August, you get the average is much closer to 850 pounds. Some cattle come off grass and things of that nature. But I don't think that those weight class changes and stuff aren't skewing the seasonality chart that I showed before. So it's not, these weight changes aren't that dramatic that you would have a big influence on the seasonality observed. The other thing with prices, and from a outlook perspective, I don't see any of these changing in any major way because of market conditions. So tend to have those patterns of higher volume continue in those months, and the weights probably be consistent for the most part in those months. The last piece of related stuff to this would be a look at the price slide and spread. This is just a look back at March of 2023. So had you backgrounded last year, this was the slide and spread. You would have observed the spread between steers and heifer prices and the price slide at different weights. So this is going to fluctuate a little bit depending on largely on the price of corn. So last year, the price slide, or the relative price change at different weights, was probably relatively low compared to what I would expect to see this coming March, with corn being down in price. So with corn lower, I'd expect a steeper slide, and it is something to consider or take into account when looking at in weights of steers and heifers moving through. Now I'm going to shift gears. That's what I've got for kind of background outlook type of stuff. And I'm just going to do a quick dive into what I've been using over time to look at the aggregate numbers specific to South Dakota. So I've got some feed and cattle prices specific to South Dakota to just kind of say, what if one would have backgrounded? What did the payoff from this look like if we do a look back? So when I think of 5 weights going into a feedlot, I've got to come up with some kind of a ration to feed it, and I'm probably going to have some kind of corn and some kind of roughage making up that diet. And I'll leave it to Warren and Madison and Sydney to go into details of their diets, the rations that they would use. But I've just got 2 inputs in my simplistic diet, or my synopsis for the diet here. And that would be all hay in South Dakota. So the blended NAS price for hay, reflecting a little bit of alfalfa and grass hay mixed together. So you've got the alfalfa price, you got the other hay price. All hay price is what I'm showing here. It's the all hay price in November, price received by farmers, reported by NAS. The other price is the price for corn, price received by farmers, state level, South Dakota, in the month of November. So a harvest price for corn, post-harvest, beginning of winter price for the hay. And you can see here that the two prices, the price of hay in dollars per ton, the price of corn in dollars per bushel, the two price levels tend to move close or similar to one another. They reflect the supply shock problems regionally, the tight supply of corn in the 2007 area, the drought conditions and drought problems in 12 and a little bit of carryover into 13. And then the most recent price run up as the aggregate supply of corn was very tight, and predominantly the whole western half of the United States was under drought conditions in that 2021, 22 period, really pushing the price of hay substantially higher. So the major input to background cattle is feed. And here we've got the two proxies for what's feed cost. And both of them have fluctuated a lot. And I'll just point out that here in 2023, or the most recent data year, November of 23, that price came out finally at the end of December. That price at $135 or $135 a ton was actually up from a year ago. So corn has fallen substantially compared to a year earlier, or the last 2 years. The price of hay in South Dakota has stayed very high. What does that mean? We'll come back to that. So that's what's happening on the input or the feed cost side of things. Corn has finally fallen, but the overall roughage cost has stayed high. Cattle prices, we've got two cattle prices here. You've seen these prices already. The top line is the calf price, the price of the 5 to 6 weight steer calf sold in an AMS reported sale barn in South Dakota during the month of November. So take the calf, run it to the sale barn. This is what you get, dollars per hundredweight. At the same time, you could look at the board, November futures. What is that price at? That's the feeder futures price for March of the following year, observed in November. Okay. So the price spread here between the calf price and the feeder price, that's the dollars you have to work with. And those prices have peaked a couple of different times during the last cattle cycle run up in 2014. Both those price levels were very, very, very high during November of 2014. And then in November of 2023, both those prices were almost as high as they were in 2014 on a nominal basis. And they're both substantially lower on a real or inflation adjusted basis. By the way, with inflation, what's my favorite inflation? Oh, yes. Due to food price inflation, the 5-second rule has now been extended to 7 seconds. There you go. Their economists have jokes too. Let's bolt those two things together. If you take a 500 weight, 550 weight steer and you put 225 pounds on it and turn it into an 8 weight steer, that's your gross margin. Dollars per head would be the dollar difference per head to add those 220 pounds on there using the price for 5 weight in November relative to the March feeder cattle futures price. I built a ration on paper of 13.5 bushels of 13.5 bushels of corn and 1 ton of hay. And then I ramped that up when the feeder cattle futures contract switched from being 7 to 850 to a 7 to 900 pound animal back in 2016. And then I adjusted my ration. So now it's 15 bushels of corn and 1.1 ton of hay. And what do those two margins look like, or two sets of numbers look like? The red diamonds on here are the gross margin, or the revenue to be had per head, taking a 5 weight to an 8 weight. And then the feed cost is the per head cost for that combination of corn and hay. Now, I'm sure Sydney and Madison are doing the math right now going, well, 220 pounds of gain, and how many pounds of feed is that? And 1,900 pounds dry matter for the hay, and 55 pounds, 15. They're doing it for the corn, and they're saying, well, I would feed blah, 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 blah. Yeah. Any other ration you come up with is please do that. Please do that. Run your own ration, but you're probably going to have some corn in there. You're probably going to have some roughage in there, and it's probably going to be tied to the price of corn if you're using corn silage, or the price of hay and whatnot. So these are just working numbers. This is what I'm using. This is what's behind the scenes. 1.1 ton of hay and 15 bushels of corn. So with that, what do we see? We've got, let's look back here at 2019, huge spread between what was available on the board. So having a margin available and a low price of feed. And back here in 2012, feed was very expensive. Hay was high, corn was high, and the margin, the spread between the calf and the board was fairly low. So this probably wouldn't have been a great year to set out to background, and this would have been an awesome year to set out to background. 2015 was another year where the feed cost hadn't gone crazy, but the price difference between, or the value difference between the calf and the feeder was not there. What does this look like? Here's the net feeding margin on a per head basis. So here's the dollars to be had if your ration is this and the market situation's this, and everything kind of works as planned. 2015, you had that awful set out on an awful situation. It would have been tough to justify trying to background that year. And then you can see that as recently as 2019, about $120 a head could have been had or locked in at that time. The last 5, really the last 10 years, except for 2015, have had 1, 2, 3, 4, 8 years in a row of some returns to be had. 2023, even though that corn price fell, it's that price of hay in my ration idea and my baseline here that says it's tough to, it would have been tough to lock that in. How we doing on time? All right. So what do you do with all this information? Well, you could manage some of this risk, so that downside price risk. And one of the big things is livestock risk protection. Here's the entire sales volume pattern of livestock risk protection on feeder cattle from when it started as a pilot project in 2003. Here we are 2023 or through 2023. This product is price insurance for feeder weight feeder cattle. And a few years ago, they began to greatly increase the price subsidy on the premiums to buy the product. You can see that in 2023 in South Dakota, over 550,000 head were insured with LRP, or about a third of our calf crop, a third of South Dakota's calf crop. So it's very popular, very common, and it's really taken over in terms of what is being done. How does it work, or how does LRP and put options work? It lets you establish a floor price. Yeah, there's way too much going on here. You've got cash price. So if you sell feeder cattle in the market, you're subject to the price going up or down. We're worried about low prices. We're worried about the price from today falling. If the price goes down and you've got cattle that you're feeding, you're going to start losing money on paper. And if the price stays low, when you go to sell the cattle in the market, you're going to get a much lower cash price following the board lower. LRP and put options give you a floor price. So you pay a premium for the coverage with LRP, and it establishes a floor. Put options work the same way. You observe the market, you observe a strike price, you pay a premium, you establish a floor. Both of those actions mitigate some of the risk of backgrounding. If you saw a very, very high price on the board and you were thinking about backgrounding, You could lock in that price on the board by selling a futures contract, or you could look at livestock risk protection, or you could look at buying a put. And these latter two would do a lot to knock out the bad price moves that can wreck your profit that could have been had by backgrounding. So I guess what I don't like to see is someone setting out and not doing anything, and then the price moves substantially against them. And it's like, you just fed cattle for nothing for, you know, some people love the cold and the snow and everything else, and for other people it can be seen a little bit as work and cold and everything else. So LRP and puts and even selling futures are ways to mitigate some of the price risk that can be so dominant or prevalent over a short time frame like the backgrounding time period. For more information, then I'll move on and take some questions here. There is some information available through the Livestock Market Information Center. There's the temporary guest username and password. They change that thing around all the time, but if you'd like some access to that, or would like some access and that one doesn't work, give me a call or an email and I can work with you to get you temporary access to the Livestock Market Information Center. The other thing I was going to point out, have submitted the changes to update the prices and data and basis levels for cattle in this publication we put out on the extension webpage, monthly cattle and basis levels. So hope to have that by the end of the end of January here, so that you've got the futures prices and such. If you find yourself needing that information in the meantime, please contact me and I'll try to share that with you. There is my contact information. Email works great. And I'll just flash through these as well and take some questions.
Thank you, Dr. Dierson. And as Madison put onto the chat, if you've got any questions, type those in and we'll relay those on for the benefit of everybody. We've got about 8 minutes left or so, and while we're waiting for some people in case they're maybe gathering some thoughts and wanting to put something on, I was going to throw one out, put you on the spot just a little bit, Dr. Dierson. Any thoughts in terms of timing of when we might see increased heifer retention and expansion of the cow herd?
Big picture, if I don't think it happened this last fall. I mean, there's just no indication that any aggregate area was able to retain heifers and do anything. So the heifer mix on feed and stuff says that it didn't happen in aggregate in 2023. Could it or would it happen in 2024? I think it's still kind of open-ended. I don't think you'll see it until next fall. So next fall is when you'd start to see indications of it would take, I think, still a greatly improved hay supply next summer. And it has to be nationwide. I mean, there's just no, the whole western half of the United States still kind of just needs hay. And then you'd need good pasture conditions next fall as well. So the El Nino thing might make it possible. And then you also need the dollars and profitability there to see the expansion. So I don't say I wouldn't rule it out for 2024. But you're going to have a lot of things go right to give you a big type of wholesale expansion, especially in states west of the Mississippi. Is that vague enough?
Yeah, in other words, it all comes down to if we have more feed and stronger prices, people will be incentivized. But if we don't have both of those, it's going to be kind of probably a repeat of what we've been seeing, where
but I see it as like three hurdles really in the way. So you're going to have first a good hay crop and good conditions in the fall to have some pasture and whatnot, and have the price prospects say, hey, you've got the chance of making some decent returns by holding back some heifers.
And one other question kind of jotted down in my notes that what's your sense in terms of difference in LRP volume most recently compared to the total volume of futures and options on that live cattle contract? Which one of those two, which one is, how do those two compare in terms of relative value?
In looking at the open interest levels on a cursory, just kind of taking a snapshot of that. Okay. I think the LRP is probably swamped or overwhelmed the number that would have been that you could say were being hedged using options or hedged using futures. So the number of head covered is if you compared that on a number of contracts basis, it would be it might be I think the nod goes to LRP right now.
Matt, I have a quick question for you. One thing, a lot of the participants here did mention that they had backgrounded before, but maybe for someone who has only done it a year or two or hasn't done it at all, what are some financial risk management strategies they might be able to employ to make sure that first year is as successful as we can hope for going forward?
I think if you go back to a couple of years ago when on paper, the expected return was really high, that would have been a good time to jump in. And if that margin is big enough, so when there was over $100 a head, for example, to be had, that's big enough that you can make a lot of mistakes, and also get a lot or buy a lot of offsetting risk protection at the same time. So the beauty of livestock risk protection is the subsidy is so big that the out-of-pocket outlay for the product is very, very low. So you can that one's kind of an easy one to do or get started with. But even if you weren't doing that and wanted to do put options outright, you could do that as well, and there would be the dollars available to make that expense or to cover that expense. And that's what, if I'm a banker, that's what I'm looking for. It's like, well, you've never done this, but you're going to do it with this protection. So that knocks out that downside from the loan performance standpoint, and makes it more attractive and more reasonable to expect better financing or better financing terms.
So we've got a question in the chat box. When you're planning for risk management, how do you figure in shrink, sale barn, selling costs, etc.?
A lot of that's covered in the basis levels. So if your animals aren't are average, they're shrinking like the other ones and everything else, that's still going to be reflected in that average price received. If your animals are coming from further, so they're going to have more shrink or something, or you hear the phrase reputation cattle. If your cattle don't have a reputation, then you'd get hit a little bit relative to that. But otherwise, if they're average cattle moving through, they're not shrinking any more than the other ones. So some of those regular factors are reflected in that price already. Sales commissions and stuff aren't, they're constant across number of head and stuff. So that's the market take. There's maybe other thoughts too. So.
and some of those could be calculated into some of those non-feed costs. I'm thinking like sale barn selling expense, trucking, some of those, but different ways to account for them, I think as long as they are accounted for in some manner. Anything else? We did a little switching on some of the chat functions to make sure everyone could get on. While we're waiting, we'll give a little bit of a preview for what we're going to talk about next week. That will be a joint presentation or a tag team approach between Sydney and myself. We're going to be talking about applying some of what Dr. Dierson has talked about in terms of targeting growth rates, identifying where do your cattle fit. Sydney's going to be talking about some of the things she's worked on from a research standpoint with growth promoting technology, supplementation, and so forth. So we're going to try to get at maybe the production side or the output side. And then on week 3, we're going to look at some of the things that Dr. Dierson talked about in terms of costs, different diets. How do we deal with the environment we're finding ourselves in now, where corn is becoming relatively less expensive, but hay is not. And then also Madison's going to update on terms of water requirements and water intake during various seasons of the year. Water is often the forgotten, underappreciated nutrient, but it's certainly critically important in terms of maintaining performance. Give just a kind of one last call. We're at 1:31 by my clock, so we're right at an hour. So if there's something else that comes along, or if you're thinking of something, if you've thought of something as you're later on in the day or next week that you thought of but weren't able to ask now, feel free to email any of us and we'd be happy to answer that. Seeing nothing else and wanting to make sure be respectful for everyone's time, we thank everybody for attending. Look for the recorded links to be available as we're able to get those put together. You'll have access to those, and so you can share that with other team members or review at your leisure. Again, then we look forward to seeing everyone next Wednesday at the same time. Thank you, Dr. Dierson, for sharing your expertise with us. We look forward to seeing everyone next week. Have a wonderful week, everybody. Stay warm. We will see you next week.